Hi, it's Arjun. In last week's video podcast, we did a look back on our big themes for 2025, the Outlook post we did early last January to assess how'd we do. And with three main themes, we did pretty well on those. We had four sub themes that we teased that, frankly, I don't think we did as well on. And we're going to aim to, frankly, be better targeted on our big themes when we do our 2026 Outlook post, most likely early in January. Now, those were the big themes. This week, we want to evaluate what was a follow-up post later that same January that we did on our top 10 tactical calls for 2025. And we're going to use a good call or bad call framework to assess how we did. And spoiler alert, overall, we did fine, but a little bit like last week, we were far from perfect. Now, at the end of this video, we also do a broader assessment of how we're feeling about some of the bigger takes and calls and thematics we've had in what's now been just over 4 years of publishing Super Spiked. And we'll reflect back on kind of what we're most proud of, maybe some things we do differently, and then most importantly, what is our forward view. Now, I heard from many of you last week, which I appreciated, that you appreciated that we did sort of a proper assessment of our post, our Outlook post in the beginning of the year. And some even said, hey, you're a pretty tough grader. I'd like to think I graded myself no differently than I would have done my former analyst that used to work for me back at Goldman. Frankly, it baffles me why everybody doesn't do this. I would say if you're a corporate team that puts out targets or promises to investors, if you are certainly a Wall Street person that publishes Outlook reports and otherwise has stock or sector calls, but also if you're in academia or in a policy shop and you may not quite have these sort of bull bear, up or down type calls that an analyst or the specific targets the company do, but y'all have your views as well. And in my humble opinion, everybody that puts out these types of posts or reports or is in this broad line of work ought to do these self-assessments looking back over the previous year or whatever the previous time period is. By the way, they're generally popular. People like accountability. No one expects you to be perfect. And for me, it helps me understand what did we do well, what did we do poorly, where could we improve, and at the end of the day, how do we make better calls going forward? With that, let's get into it. So our top 10 tactical calls for 2025 was grouped into sort of four main sections: the macro, geopolitics and policy, sectors, and then M&A. We had kind of 2 or 3 or 4 questions within each of these broad categories. Let's see. I can start with the macro. Let's see how we did. So we had 3 questions that we sort of asked. Will energy have a rising weighting in the S&P 500 in 2025? We answered yes. Will there be a pivot away from net zero scenarios? We also said yes. And will oil become great again in 2025? And to that, we answered no. How do you think we did? We're going to say bad call on question 1. The S&P weighting for energy fell to 2.8% from 3.3%. And I would note we had answered the question yes, despite saying that we weren't going to, oil was going to have some challenges in 2025. So a little bit of a self-critique here. We're going to give ourselves credit for answering question 3 correct, that there was another bout of non-OPEC supply that we were concerned about at the time. This was before Liberation Day, so all the fears around that. It was before sort of OPEC announcing its quota unwind. But prior to all that, we were a little bit concerned about supply-demand balances for 2025. So we said oil was not going to be great again, yet we somehow had the energy weighting rising. Not going to argue that that was super consistent. I think we could have done better in these actual answers of having been better aligned, especially when names that are exposed to the oil sector make up such a large portion of energy's weighting in the S&P 500. I think the part that we certainly got very right was this pivot away from net zero scenarios. And again, I hear from some of you, hey, it's the activists and so forth that took most seriously specific net zero pathways. I'm not talking about that. I'm talking about what became a very mainstream narrative of, hey, oil demand, natural gas demand is going to plateau in the years ahead. Maybe it's not going to fall off like a specific net zero scenario was calling for, but some broader maturity of the sector, this call for traditional oil and gas companies specifically to transition. That was not just activists calling from that. That was a much broader swath of people engaging in all of those kind of things. And I feel like that part we got very right, and it's been a motivating driver of Super Spiked. and we addressed some of that in last week's video. Again, I think we've felt good about the framework we've used for oil prices. I think I could. There's no reason I shouldn't have married it to more explicitly to the energy weighting question. So we're going to say bad call, good call for those first three, and I think we didn't. I think we should have been 3 for 3, since I think we felt more strongly about oil having likely to have some challenges in 2025. The next big topic area was geopolitics and policy. I think we asked two questions here. The first was, will the IRA be repealed, reformed, or left alone? And then number two, will President Trump make the Arctic great again going forward? And we said IRA will be reformed, neither repealed nor left alone, and that yes, Trump will be positive for the Arctic. And we're going to give ourselves credit for good call, but I think we'll analyze this a bit. I think on the IRA question, I think this was a big policy and geopolitics question, so I think it was a good question to ask. It was an important one. I don't. They definitely didn't repeal it. I guess you can argue they didn't reform it. They just took away a bunch of subsidies they didn't like. Some things were left in place, but I'm gonna stick with the reformed. Maybe not reformed in an optimal manner, but I'm gonna stick with it. It wasn't repealed, but it also wasn't left alone. We're gonna give ourselves credit for that one. I think on the will Trump make the Arctic great again going forward? Um, I think if we had 10 geopolitics or policy questions, maybe this would have been good if that was the sole focus of the post. But we only had 10 tactical questions in total, and geopolitics and policy were a subset of it. I think, was this a top two policy question? And with hindsight and frankly foresight, obviously not. So I would say, and maybe this is still born out of the net zero mindset that's out there. I think it is very important for people to think differently about the Arctic than they have been. This is clearly a very strategic area for our country, for the United States overall. And I think as U.S. shale matures, separate topic about the degree of maturity, but as it matures, I think the Arctic, along with Canada's oil sands and a bunch of other regions, are going to be very important in terms of kind of having a healthy U.S. and Canadian energy market. But therefore, I am very positive on the Arctic as a long-term opportunity, and I wholeheartedly disagree with what is often either activists or sustainability type pressures that say all of this should be left untouched. I do not agree that all of it should be left untouched. But I think Trump's done some positive steps towards the Arctic. I think the question is this really a top two policy question? So I gave myself credit for good call. I think you can argue, I'm going to use my director of research hat on here, not clear that this was like the top two policy question we could have asked at the beginning of the year. So we're going to try and do a better job in early 2026 of really trying to ask the most important questions. And arguably, this wasn't the most important question we could have asked. Let me turn to some of the sector calls that we addressed in the tactical trades. Will power exposed sectors lead the way in 2025? We said yes. What new technology area are we watching more closely to break out in 2025? And we said autonomous driving. How are we going to self-rate ourselves? We're going to say good call. I think on the will power lead the way, I don't believe this requires a lot of elaboration. Clearly, another great year for anything in the sort of power and AI theme. Good call there, maybe an obvious one. I think on the what new technology are we watching more closely? I mean, I asked it for myself, and this was the area that I was watching closely. And I do think there's been some pretty notable progress in autonomous driving. If you go back and look at the January note, we did not say that, there's going to be a mass fleet of robo-taxis everywhere, that this was going to be an important step. It's a little bit like the Arctic thing, quite frankly. This was going to be important long-term development that is moving in the right direction. And it's certainly one that I think, I personally am spending a lot of time on. Again, I think we have to ask ourselves, though, if we're asking a technology question, is such a specific sort of answer really helpful enough? So as an example, it clearly was a big year for any equities exposed to SMRs and to geothermal. Like, I think we could have asked a more important question, or maybe answered it differently, or had a broader build out of technology and how we're thinking about it, both at Super Spiked, but frankly, my colleagues at Veriton, as a firm, we're doing a lot of work on a whole bunch of new technologies, and I think I could have broadened this out in a meaningful way. So I'm going to give myself credit for a good call. But I think a little bit like the Arctic thing, I probably needed a better or different asked question to really flush it out, or have just done a piece dedicated just to new technology. We're going to say, again, the scorecard, good call, good call. So our last trio of questions were around the M&A topic. The first one was, will we see an acceleration of oil and gas firms entering power markets? And if so, do we expect it to be via large-scale M&A or organic? And we said, yes, oil and gas firms will further enter the power markets. And remember, we wrote this in late January, and we specifically noted that a quartet of oil service pressure pumpers had already kind of announced some intentions. And I think ExxonMobil had done their corporate outlook report that previous December, and they'd made some commentary. So we sort of excluded companies that had already explicitly mentioned this in various outlook or quarterly earnings calls. And so it's important to, did we get this correct or not, exactly what we were referring to. Second question we asked in this topic area, ninth overall, does the Venture Global IPO signify that the tide is turning within energy sector on capital formation? We said yes. And then lastly, will we see a surprising mega merger in energy? And again, anything after this note was published, again, this was published in late January of this year, we again answered yes. How'd we do on these? I think you all know, bad call, bad call, bad call. So did we see an acceleration of oil and gas firms entering power markets? Absolutely not. I think there's still a very cautious, what's our role in it type approach. I'm not saying that's inappropriate. We've certainly seen those pressure pumpers make significant progress on the power theme, but they were already in it. And so I think I'm just going to say we were wrong on this. I guess we were right that no one did large scale M&A, but I feel like when you get the first part wrong, I don't think you can take credit for the second part. Did the Venture Global IPO signify new capital formation? We can see it in the reduced S&P weighting. We went from 3.3% to 2.8%. So by getting that, I think it was the first question that we asked ourselves, by getting that wrong, I think that certainly impeded further capital formation in traditional energy. And it's still been pretty tough sledding. Power, AI, all these things, lots of capital going into those sectors. Not exactly the case in traditional energy. And then will we see a surprising mega merger? We haven't. I mean, I guess you can argue this is being published December 20th. I'm recording this on, I don't know what today's date is, but it's sometime before December 20th, December 17th. At least as of right now, we haven't seen a surprising mega merger. If someone does one in the next 2 weeks, we'll reclassify our answer, but we're going to say bad call, bad call, bad call, which results in a final scorecard of 6 right, 4 wrong. Though we do have to caveat it that of the 2 that were right, one can debate how important the question was in the first place. But 60%, if we were a baseball team, that's winning 96 games. If we're an NBA team, it's winning 49 games. That is a solid season. You're making the playoffs, whether you're a dominant World Series or NBA title contender, maybe not, but hey, got to make the playoffs and you have a chance to win it all. So I'll say I think we did okay overall on our tactical questions. I think we can really tighten up and fine tune what are the most important tactical questions, and we're going to strive to do a better job when we do a equivalent version of this in early 2026. So I wanted in these last couple slides to do a little bit of a broader assessment of where we are in Super Spike, both in terms of some key themes, how we're feeling about the world, and what our forward view is. I think there may be like 5 areas we're going to go through here. I think the first was, and we're going to stick with this good call, bad call framework. So we're just going to say good call here. Our original pushback, our original driver for creating Super Spike was to push back on the energy transition. That idea that by some, frankly, very short time period, 2050, you could shift out of oil and gas and go to some large degree only into renewables and some related technologies like electric vehicles and so forth. We originally taglined Super Spike, a messy energy transition era arrives. It is what motivated us to unretire, to start publishing again publicly, to rejoin Veriton. We just did not agree. And again, I want to be clear, not just on the activists. I actually often have the least issue with them because I think their role in the world is very clear. But frankly, the mainstreamification of that narrow definition of energy transition, all the pressure on big oil companies in particular to be partners in the transition, to engage in new business models that I don't think made sense. And I think we need to, what is our forward view of this? I think that fight is over. I mean, at some point, you can't keep fighting the fight that is ended. The call does need to evolve. So this year, we did transition our tagline to "Everyone on Earth deserves to be energy rich." And I think that was an important tagline adjustment to shift the narrative to a forward view. I think sometimes we enjoy being a little bit in fight mode. And so we probably still argue this sort of the energy transition was a mistake type viewpoint. But with things like the Bill Gates memo, there was a Financial Times big read on what went wrong with some of the two large super majors that went most aggressively in energy transition, with the Ford big EV write-off of this past week. I think the world has moved well beyond this notion that that definition of energy transition is kind of dead and gone. And so I think our goal will be continue to emphasize what I think is our passion. How do we ensure everyone on Earth gets to be energy rich? To me, it's just a clear goal that everyone, every country, every person aspires to. Unfortunately, not everyone benefits from it today. And I think there are aspects of quote transition that are happening. The power sector theme, you see it in the business models of companies that, again, the pressure pumpers going more into distributed generation. We are seeing notions of transition. It's just not the drivers or the reason for what people talked about in the prior 4 years. I think one of our better themes has been this lucky 1 billion versus other 7 billion framing. We do hear it a lot beyond just what we write. And I think we're both proud of it, and with really a very big driving focus on us. I think what we will look to do going forward is, what do future energy S curves look like for these billion person scale economy regions? They're all going to be a little bit different. The way China has developed and is developing is different than how the US and Europe developed. It's different than how Japan and South Korea before it developed. How India's going to develop is going to be different yet again versus China. There's some green shoots in Africa. There's the Middle East. There's Latin America. And frankly, there is a return to the OECD, US, and Europe, and what are going to be the changes there. So things don't develop exactly as they did in the past. In fact, not at all. Every country has its strengths and weaknesses in terms of resources, in terms of technologies, in terms of what makes sense for it. And I think this overarching motivation, how do we get more of the other 7 billion to move into lucky billion person status, is absolutely a huge motivation. And I think we could do more work on kind of laying out the pathways for these different areas. In oil, we've had a super vol, not super cycle type call. We've had that really from when Russia, Ukraine, oil recovered out of COVID, and then we went into Russia, Ukraine, and some combination of these things drove oil into the hundreds. And we pushed back that we were in a super cycle. I think that part has been good. The part that I'm going to self-critique is, we are so determined to not have short-term explicit oil price forecasts, which I 100% think is the right answer for super spiked and Veritas, that I think we've been too loose on the tactical. Now we've improved in recent months. We've said we do not expect a triple dip, deep COVID 2016 type downturn, despite the current oversupply. We're looking for, I think we use the phrasing, modest oversupply. We think it can last anywhere from the next 1 to 6 months, meaning through the first half of 2026. And then we expect tighter supply demand balances going forward. I think that is more helpful. I think that's a clearer view, where we don't have some specific, it's going to be 52 or 58 or all these guesses that the street feels forced to make. But nor are we just saying super vol, hey, it could be anything. It could be high, it could be low. What do we know? We definitely have opinions on that. And so I think marrying the structural with the tactical, we tend to prefer to be structural orientation, but no one can just ignore the tactical, even within the context of focusing on the structural. And so I think we will do our best to not be so loose on the tactical nature of the structural calls that we're making. I hope that all makes sense. We can do that by probably being more explicit, as we're starting to be more recently, on what we expect for peak, what we expect for trough, how deep of a trough, mild trough, deep trough, what's the speed and magnitude, timings, all these kind of things. I think we could do much better job of laying that out and not being as loose as I think we've been in the 4 years we've been writing Super Spike. Just a couple more to go through. I think this was a really bad non-call, has been the Trump administration's impact on the rest of the world. And we can say that, hey, that's not really the last 4 years of Super Spike. That's kind of the last year, but whatever. The last year was within the last 4 years. And it really has been. I'm going to put the forward view of here. The trip to the Middle East that I did a couple weeks ago with the Center on Global Energy Policy was really just. I used to travel globally regularly, and it really helps you understand the different viewpoints that people have towards the U.S., towards a broader energy macro conditions, whether it's U.S. or not. And I was reminded of that. I was reminded of how critical U.S. foreign policy is and the perceptions and the realities of what the U.S. is doing to what's going on to companies and countries and people around the world. And so, again, I said this earlier in the tactical questions we asked. It was very inward. It was very kind of American. I'm American. I obviously write from an American's perspective, but that sort of will the Arctic be great going forward? I do think the Arctic's important, um, and I do think Trump administration's taking the United States in a better direction on that than what was previously happening. But on the other hand, U.S. foreign policy, our relationship to all these different countries, it's been a huge thing. Obviously, I think as best as I can get, every single person in Canada has been deeply offended by the rhetoric towards it. I think it's different in Europe. It's different in the Middle East. This has been a pretty material development for oil markets. Even just OPEC's unwind of its quotas came about in part as a result of, I'm going to say, Trump administration policies or, you know, conversations they've had to ensure that, or to try and get gasoline prices to be lower. So it's had a huge impact. I think it's been a real miss on our part to have just not, we didn't really spend any time thinking about how the Trump administration is going to interact with the rest of the world, and then what would it mean for the energy macro? And again, we're not geopolitical experts. That's not what we're trying to do here. We're trying to analyze energy markets specifically. I think we did a bad job on this, and I think we're going to try and be better going forward. We need to travel the rest of the world to a greater degree. Get back to that. Um, our big structural theme has been power surge. We think it is this generation super cycle. Arab oil embargo from the 70s, China BRICS from the 2000s. This go round, those are both essentially oil super cycles. This go round, it is power surge. I've spent a lot of time talking about this. I think everybody knows our views on this. And of course, there's a lot to do here. We will bring, our orientation would be to bring more of a global angle to this. What is going on in China, in the Middle East, Europe, and so forth. We are, for sure, our background has been more on the oil and gas, upstream, midstream, downstream side of the energy business, less so on the power side. But there's a convergence here. I think the growth in data centers, AI, all these things, we're seeing a real convergence in our businesses. I'm speaking as a Veridan partner. And I think there's a lot of exciting stuff to do in this space, and I'm excited to dive in. So I'll end this video on a personal note, and we're going to stick with the good call, bad call framing, and we're going to address, I think, a quartet of topics here, or at least a trio of topics. The first, good call. And I'm going to go back on a personal basis. It was a good call to transfer from Cornell to the University of Denver. A story I probably still need to tell in further detail on this. It was a good call to do a Hampton summer share in 1998 that a buddy of mine that I grew up with said, "Hey, I can't do it this year. It's a bunch of my college and related friends. Would you do it in my place?" I didn't know anyone in this summer share. I did it. I ended up meeting my wife through it, through a blind date from someone who was in the share house with us. Clearly a great call. And then the third of four great calls on a personal basis was that decision to retire from Goldman Sachs at the age of 45. I was not enjoying the director of research job. I think I did gain some valuable skills from that job that I'm kind of recognizing now, but the day-to-day of it was definitely not fun. But I got to see all three children through middle school and high school. And then also in that time between private equity, corporate board, and public policy shop, I was able to diversify sort of my energy network and circle and skill sets and so forth. So really great decision. And now we're up to the fourth one here, which is to have my parents move from about 6, 7, 8 hours away, depending on the time of day or the day of the week, to being 10 minutes from our house that we live in. And that was, I guess that was also their decision, but it has certainly been a great blessing having them nearby. I haven't really lived with them since I went to college at the age of 18, and to have them nearby, to really get them to know them in a very different way, one of the best personal things that's happened to me in 2025. Second big thing that we want to address, good call, bad call, was we bought a second home, a condo in Houston. I'm going to say another good call. 2 for 2 so far. Loving having the condo in Houston. It takes the travel out of working again full time at Veriton. Houston's an awesome place to actually live, maybe more so than just visit. It is a great place to live, very livable, great restaurants, great people. Love having the building's new. A lot of, it's not the Northeast that was built, 1,000 years ago. Stuff's all new down in Houston. So loving the new place. I think the third topic area we want to address is this is now kind of in year 3 of working at Veriton full time, and how has it impacted the golf game? It's obviously a critical question that I know many of you have questions about. So we got 2 graphs here. We have the number of rounds we played, and then the number of rounds posted, which is the graph on the left, and then our handicap, both the actual and then a rolling average of it on the right. And so the graph on the left is the last 10 years of, which is the time I've been playing golf. So I didn't start till I retired at Goldman. I didn't start till the age of 45. I don't have the 2014 data, so I kind of started tracking this stuff in 2015. And you can see the number of rounds played. So prior to COVID, I was generally between 90 and 120 total rounds played. That includes sometimes going out for 9 holes with my wife or something like that, but 120 total rounds played. And then we would post anywhere from 60 to 80 of them. So that's what goes into your handicap. I will call those sort of formal rounds, if you will, meaning you played a proper 18, you putted out, all that kind of stuff. You kept proper score, generally about, anywhere from 60 to 80 rounds posted. And the peak was 2019. We had COVID, which interrupts the stats in that year. And we're kind of back on track in 2021. This is all pre-Veriton, 110 rounds played. What is that, like 78 rounds posted in 2021. And since then, things have been declining. Now, the first couple years of Veriton, total rounds played were between 75 to 80, and the posted rounds were around 60 rounds per year. So 60 proper rounds, maybe another 20 of playing 9 here and there, adding up to a full round equivalent basis, and we were at 80. This year, we are down sharply. We've gone from about over 80 rounds total played. So we're gonna finish the year. It's we got snow right now. We can finish around 55 rounds total rounds played, and we've barely posted. I think it's either 41 or 42 for this year. So the aggregate rounds down are down, and why is that? Between weekends, between sort of the summer, you get the early mornings or the longer days. I don't think it would have been impossible to have gone back to 80, but maybe it's a sign that year 3 of Veriton is the year we've actually finished that sort of unretirement transition to really working full time. I'm not blaming Veriton, just to be clear. This is something that I could have played more rounds, but it is such a fun time in the energy sector. It is a fun time traveling, visiting companies, all of our partner companies, all the meetings I speak at and so forth. It has definitely started to materially impact the number of rounds played. And I'm okay with it. I'm actually okay with it. And I'll just say, one of the ironies, if you look at this picture on the right, is that our handicap, the low was 7 point, I think it was 7.8 in 2021. I've generally been between 8 and 11 for the last 3 or 4 years. So you can see it was trending down as we were picking up the game, and then kind of stabilized here. And for the first 2 years of joining back at Veriton, we were kind of right at a 10 to 10.5 handicap for better part of 2 years. This year, we're going to finish the year. The posting season in the Northeast ends November 15th. We ended the year at an 8.5 handicap. We're actually generally feeling good about the game. So it is interesting that number of rounds played, number of rounds posted down in this year. But my practice time was almost non-existent this year. This year, the handicap has actually been moving in the right direction. So we're going to think what the right target is going forward. Maybe something in this 50 to 60 round is a good sweet spot between not overworking too much and forgetting about personal life, but maybe we were skewed a little bit too much, too many rounds to properly do this job. So we're gonna figure out this balance going forward. We have one more for you. We'd like to wish everyone a happy Hanukkah, a Merry Christmas, and a Happy New Year. This is going to be our last super. Given where the holidays fall, we will not be publishing a super spiked, either a written post or a video post, until we get back after New Year's. And so that first one will probably be on January 10th. We'll see if we do something a little bit before that, but I'm guessing that for the next 2 Saturdays, we won't be doing this. And I do hope everyone does get to take some time off, enjoy time with family, friends, and so forth. Wish everyone a safe, healthy, prosperous, and happy holiday season. Happy New Year, Happy Hanukkah, Merry Christmas, and we'll see you all in 2026. Thank you.